All right, well, railroad shareholders at Norfolk Southern and Union Pacific filing proposals that call for an employee paid sick leave policy after those benefits were left off recent legislation signed by President Biden last week to avoid a strike. Here now is one of those Union Pacific shareholders behind that proposal. We want to bring in Kate Monahan, Trillium Asset Management's Director of Shareholder Advocacy. Kate, it's great to have you here. So the business case, explain to us the business case here for making more sick paid leave here available for the rail workers.
Yeah, thank you so much for having me. And I think there's a really clear business case. We have studies that show that paid sick leave reduces turnover, increases retention. It can help reduce hiring costs and costs that are associated with turnover. And so, there is a really clear business case. Investors have been asking other companies, not just rail companies, to, provide paid sick leave to their workers. Overall, I think also the pandemic showed us that it's not just an individual company issue, it's also a public health issue.
In a recent note, November 30th, Susquehanna says a 1.5 to 2% hit if, in fact, that legislation passed that would have added those 7 sick days. What's your reaction to that?
Yeah, I think, from our perspective, we're really just focused on what companies can do themselves. I think, obviously, we believe that paid sick leave is important. And so any legislation that furthers paid sick leave, I think, is good for the economy, is good for our portfolio companies. But
Kate, sorry to interrupt, but is it bad for investors? Because that's what the note is suggesting.
No, I mean, over the long term, no. And there's studies that back that up. I think, if you're focused on the short term, if you're focused on short-term profits, then, certainly not investing in your stakeholders, not investing in your workers is probably a better bet. But over the long term, that's not the case. That's not true. If you're disinvesting from your workforce, you'll see the effects of that later on. And I think we actually see that with the situation the rail companies are in right now, where they've cut their workforce, by 30% in service of precision rail, but that are now facing a labor shortage, and that I think that's just kind of how the cookie crumbles over the longer term.
Different take than what we heard from Susquehanna. Kate, what about the action of Congress stepping in? When both sides can't reach an agreement, Congress then steps in. The legislation that was passed wasn't really what many of the union workers, many of the rail workers have come out, many of them very critical of what has played out over the last several days. Should Congress step in this case?
I think certainly, like I said, as investors who believe in the value of paid sick leave for our companies over the long term, we would be happy to see, Congress require paid sick leave. But I think ultimately, because that didn't happen and we're now trying to engage our portfolio companies to see what they can do independent of the public policy process.
And in terms of a bigger picture, Kate, there is this war against ESG investing. In the face of it is probably Florida Governor Ron DeSantis, who calls it woke capitalism, stripping $2 billion from BlackRock. The Texas governor clearly picking up on that mantle as well. What is your argument against what DeSantis and his CFO are currently saying?
I think ultimately, for us as Trillium is, we've been focused on ESG since we were founded in 1982. But we're not just, doing ESG from an ESG perspective. It's also a values-based perspective. But at the end of the day, and we know that not all firms are like us, right? Not all firms are values-based. But, at the end of the day, ESG is just data. So, it is just information that investors are taking in and using to make informed decisions.
Is it intended to maximize returns? Because that's what the Florida CFO argues it is not doing.
I think it's intended to maximize returns. I think it depends on who you ask, but I think ultimately, like I said, it's just data that investors are using. If we know that we're going to live in a carbon constrained world going forward. And so really it's just investors reacting to that knowledge and looking for information that will help them invest in that world.
Okay, Kate Monahan, really appreciate you coming on today. Thanks so much.